Many gurus promise untold riches with their secret investment strategies. They lie. You see them everywhere, popping up on your feed, always smiling next to a fancy car or in front of a rented mansion. They tell you to buy this stock or sell that one, promising a quick fortune if you just follow their simple steps. They flash charts full of green arrows, showing massive gains that seem almost too good to be true. And often, they are. Take, for example, the common advice you hear about chasing the next big thing. It sounds so logical, doesn't it? Find the company that's just about to explode, invest early, and ride the wave to millionaire status. They show you a chart of a company that went from pennies to hundreds of dollars in a year, implying you could have done the same if only you had known. They make it look like a clear, straight line upwards. What they don't show you are the hundreds of other companies that crashed and burned, taking investors' money with them. They ignore the immense risk, the sheer luck involved, and the fact that by the time you hear about it, the next big thing is usually already over. The beginner, someone new to all of this, easily falls for it. They see those charts, hear those promises, and think, this is it. This is my chance. The narrator paused, looking directly into the camera. There was no sound, no dramatic music, just a steady gaze that held a mix of understanding and deep regret. The eyes seemed to say, I know what you've been told, I know what you're feeling, and I know how unfair it all is. It was a silent acknowledgement of the countless people who had been led astray by these false prophets, a quiet sorrow for the dreams that had been built on such shaky ground. The weight of that unspoken truth hung in the air, heavier than any shouted warning could have been. The market doesn't care about your feelings, only your understanding. And many would rather you never understand. They profit from your confusion, from your hope, from your desperate desire for an easier path. They build their empires on the backs of those who just want to get ahead, offering a mirage of quick wealth instead of the solid ground of real knowledge. The friend or online influencer, eager to share their hot stock tip, isn't always malicious. But they are often just as misguided, passing on bad advice they themselves received. The seminar or online course provider, promising passive income, builds complex, high-fee schemes that benefit them far more than the beginner. But what if the real secrets aren't secrets at all, just uncomfortable truths? What if everything you've been told is designed to keep you from true financial freedom? What if the path to real wealth isn't a hidden shortcut, but a well-trodden, disciplined road that most people are simply too impatient or too misinformed to take? These are the questions that linger, the ones that start to chip away at the illusions. The beginner, after a few painful losses, might start to feel these doubts, a gnawing suspicion that something isn't right. They begin to sense that the antagonist, misinformation itself, is a much larger force than just one guru. Before we continue, subscribe to the channel and tell us in the comments where you are watching from. The beginner, like so many others, started their investment journey fueled by a potent mix of hope and desperation. They saw the stories of overnight successes, the flashy lifestyles, and believed that financial freedom was just one lucky breakaway. It was a common path, paved with good intentions, but often leading to frustration. They had spent years in a familiar financial routine, a cycle of budgeting for bills, trying to make ends meet, and watching their small savings account barely keep pace with inflation. The feeling of being left behind financially was a constant, low hum in the background of their life. Every month, money came in, and almost immediately it went out again. Rent, groceries, utilities, the occasional small treat. There was little left to truly grow, to truly build something substantial. The idea of investing, of making their money work for them, felt like the only escape from this endless treadmill. One evening, a close friend, buzzing with excitement, shared a hot stock tip. This friend spoke with such conviction, detailing how they had heard it from an insider and how this company was poised for massive growth. The beginner, wanting to trust their friend and eager to finally get ahead, decided to put in a small sum, a significant portion of their meager savings. They watched the stock ticker nervously for days, then weeks. The initial excitement slowly turned into a cold dread as the stock price began to fall, steadily at first, then sharply. The beginner saw their hard-earned money dwindle, then disappear, leaving behind a bitter taste and a growing distrust of quick fixes. There was no dramatic crash, just a quiet, painful erosion of capital. Next came the lure of passive income. An online seminar, heavily advertised on social media, promised effortless wealth through a complex, multi-tiered scheme. The seminar provider, slick and charismatic, painted a picture of financial independence, of money flowing in while you slept. The beginner, still smarting from the stock loss but desperate for a solution, signed up. They invested time, money for the course, and even more money into the recommended tools. Weeks turned into months. The promised returns were negligible, swallowed up by hidden fees and convoluted processes. The passive income was anything but, requiring constant effort for almost no reward. It felt like another betrayal, another scheme designed to extract money rather than generate it. The beginner then tried their hand at market timing. They devoured news headlines, watched financial commentators, and tried to predict the market's movements. They would buy based on a positive news story, convinced it was the bottom, only to see prices drop further. Then they would panic sell, trying to cut their losses, often just before a rebound. This cycle of buying high and selling low became a frustrating dance, each step eroding their capital and their confidence. Each small loss chipped away at their belief that they could ever truly understand the market. They were constantly reacting, never truly in control. These experiences, one after another, began to chip away at the beginner's relationship with investing. They started to distrust almost all financial advice, seeing every tip as a potential trap. Checking their investment accounts became a source of anxiety, a moment of dread rather than anticipation. A feeling of inadequacy settled in, a quiet self-blame that perhaps investing just wasn't for them. They felt foolish for falling for the promises, for believing in the shortcuts. The quiet resignation started to set in, the belief that they were destined to remain on the financial treadmill, forever chasing a dream that seemed perpetually out of reach. They were ignoring basic principles, like building an emergency fund or reducing debt, because they were so focused on trying to get rich quick. A focus fueled by the very misinformation that was costing them so much. The turning point wasn't a sudden flash of insight, but a slow, quiet realization that began to form after months of frustration. It was a gradual understanding that the problem wasn't the market itself, but the approach. The beginner had hit a wall, exhausted by the emotional roller coaster of chasing hot stocks, the empty promises of passive income schemes, and the relentless, losing battle of market timing. The constant anxiety, the fear of checking their accounts, the gnawing self-doubt, it all became too much. This breaking point wasn't dramatic. It was a quiet surrender to the fact that what they had been doing simply wasn't working. This shift in perspective was triggered not by another guru, but by stumbling upon a few foundational books and reputable financial resources. These weren't flashy guides promising instant wealth, but rather sober, evidence-based explanations of how markets actually work. They spoke of diversification, long-term thinking, and the power of compound interest, concepts that had been completely overshadowed by the noise of quick, rich schemes. The narrator's earlier warnings, which had previously felt like abstract advice, now resonated with a deep, personal truth. The beginner realized that the antagonist, misinformation, thrived on complexity and emotional manipulation, while true financial progress lay in simplicity and discipline. Slowly, painstakingly, the beginner began to implement these sound investment principles. The hot stock tips, once eagerly consumed, were now ignored. The lure of passive income schemes, with their convoluted structures and hidden fees, no longer held any appeal. The desperate attempts at market timing ceased entirely. Instead, the beginner started with the basics, building a robust emergency fund, diligently paying down high-interest debt, and then, cautiously, investing in diversified low-cost index funds. This wasn't exciting. It was methodical, almost boring. There were no thrilling daily gains, no dramatic market predictions. It was just consistent, small contributions, month after month, year after year. The antagonist, misinformation, began to lose its grip. The loud, confident voices of the gurus and influencers faded into the background. The fear and anxiety that had plagued the beginner slowly receded, replaced by a quiet sense of control. They learned to ignore the daily market fluctuations, understanding that short-term volatility was a natural part of long-term growth. The focus shifted from trying to beat the market to simply participating in it. This discipline was hard, especially when friends still talked about their latest big win or lamented a lost opportunity. But the beginner had learned their lesson. Chasing those fleeting trends only led to losses. The small, consistent gains began to accumulate. It wasn't a sudden explosion of wealth, but a steady upward trajectory. The beginner saw their portfolio grow, not through speculation, but through patience and the power of compounding. The quiet confidence that had once seemed impossible now settled in. They understood that building wealth wasn't about finding a secret, but about sticking to a proven, albeit unexciting, plan. The narrator's guidance had empowered them to navigate the financial landscape with clarity, distinguishing genuine wisdom from deceptive noise. The outcome for the beginner wasn't a yacht or early retirement to a private island. It was far more realistic and ultimately more fulfilling. They achieved financial stability. The stress that had once constantly simmered beneath the surface of their daily life began to dissipate. They paid off a significant portion of their student loans, a burden that had weighed heavily for years. They built a solid emergency fund, providing a safety net that eliminated much of their financial anxiety. They started saving for a down payment on a modest home, a tangible goal that felt within reach for the first time. They gained a profound sense of control over their future, understanding that true wealth building was a marathon, not a sprint, and that quiet discipline would always triumph over flashy speculation. True wealth isn't found in a secret shortcut, but forged in quiet discipline and unwavering truth.